Hello everyone. In this video, I'm going to walk you through the body of Chapter 12. In Chapter 12, we'll be setting up another new company. It's going to be called Your Name Service Merchandise, which operates as a partnership. This business is going to be both a merchandising company as well as a service company, meaning that it earns revenue from selling products as well as by providing services to customers. We'll start by setting up the company, including setting up the name and the tax information. And then we'll set up the chart of accounts. We'll enter beginning balances, just like we did when we set up our companies in Chapter 9 with the Your Name Designer Company and the Crafts by Your Name Company. And from there, we'll move into some new material. We'll set up vendor information in the accounts payable section, including entering several vendors and establishing the default settings for those vendors. Then we'll create some inventory items. We'll enter the beginning balances and review the inventory defaults that control how the software handles inventory transactions. After that, we'll record several purchases as well as other vendor transactions, and we'll finish by running a few reports to review the company's activity. At the end of the chapter, you'll get the chance to complete a very similar process on your own by setting up another new company called Your Name Sales and Service. So let's get started by creating the new company, Your Name Service Merchandise. And to do that, if we're in the landing page of Sage, we're going to click Create a New Company, which brings up this wizard, and we're going to click Next. Here we're going to enter all the company information per the book. This is on page 405 of the book, so take some time to enter that in there. So when you enter this information, make sure that the company name is Your Name followed by Service Merchandise. And then another important piece here, make sure that you set the business type up as partnership, because that will have an impact on the equity accounts that are automatically created by the system in the chart of accounts. And once you got your screen set up, then hit Next. So here again, we're going to use a sample business type that closely matches our company to set up our chart of accounts. So we'll leave that at the default setting and hit Next. So this screen actually changed a little bit. In the book, it's telling us to select retail company, and if I do that, it looks like it might be the same, but the account numbers are different because in the text they're using 5-digit numbers. So I think if I scroll down, I think there might be another retail company listed under these detailed types, if I'm not mistaken. Sure enough, so this is going to get us the same as what's in the text there. So once you select that at retail company from underneath the detailed types, and you're seeing 5-digit account numbers, you're good to go. But make sure you're seeing those 5-digit account numbers, and then hit Next. We are going to go with the accrual basis again, so we'll leave that at default and hit Next. And same thing for the posting method. We're going to continue to have the transactions post in real time. Next. And once again here, we're going to go with the 12 monthly accounting periods per year and hit Next. And we're going to go with the text here with the date as well. And we're going to change that to a date in 2019 and then hit Next. And we're to the final step, so we can hit Finish, and now our company is about to be created. And once we've logged into our company, the first thing the text asks us to do is change the accounting period from October to January. So I'm going to double click in the top right here, and I'm going to select the first accounting period in 2019, January, and then click OK. And then we should see that information update here, and we're ready to move on. So now we're going to start making changes to our chart of accounts. There are many different ways to get to our chart of accounts. One way is in the Maintain drop down. We have a choice for chart of accounts there. And here on page 412, it says that we're going to delete several accounts. So I'll demonstrate the first one. So the first one we're going to delete is account number 10,000. It's petty cash. So I click on the drop down. I can either type the account number up here to find it quickly, or I can just browse for it. So there's petty cash, and then we're just going to delete this account. So we hit this delete button. We get a little confirmation screen. We click yes, and now that account's gone. And basically we're going to go through that entire list. There are quite a few of them that we need to delete here. So after you've deleted all the accounts on pages 412 and 413, On page 413, it asks us to make a bunch of edits to existing accounts. So I'll demonstrate the first one and then leave it to you to do the rest. So the first one is account number 10,200. So I'm just going to type that in under account ID. I find it here. It's currently called regular checking account. We're going to change the name of that to Interstate Bank. And then all the other details as far as the account type, we're going to leave as is. So for all these changes we need to make, it's just going to be the account names. And once we've made that change, we can click Save and New, and then type in the account number for the next account, 10,400, and just keep working through this list of accounts to change. One thing to mention on account number 39,006, we actually do change the account type there. It was set, the prior account, which is partner's contribution, was set to a temporary equity account. So we're going to change that from equity gets closed to equity doesn't close. The capital account is permanent, does not close. And then save and new. So after you've made all of those edits to the accounts on pages 413 and 414, next the text instructs us to add a few accounts. So the first one in the list of accounts to be added is account number 13,000. So I typed that in for the account ID. The name of the account is supposed to be supplies. And then when we create new accounts, we need to be very careful as to the account type here. So the default is cash. Don't assume that it's cash though. And this one is other current assets because it's supplies. So we go down until we find that. They're alphabetically arranged, it looks like. Yep, other current assets. And once we got that done, save and new, and then just work your way through the rest of that list. And then the next account is in the text is Shannon Larson, comma capital. We're going to enter that as your name, comma capital. So 39,008 is a new account. So I'm going to click OK. Then I'm going to type the name of it, and it's going to be your name, comma capital. And then the account type for this one is going to be equity doesn't close. The capital never is closed. It's a permanent account. Click Save and New. And then the next account is 39,009. It's a new one as well. Click OK. And this one is going to be your name, comma drawing. And then the account type for this one is also going to be equity, but the drawing account is temporary. It does get closed. So the account type is equity gets closed. Click Save and New, and then just work through the 5 or 6 remaining accounts on the list on page 414. So once we've entered those count changes into the system, now our next step is going to be set up the accounts with some beginning balances. So this is once again a scenario where maybe the business was using a different accounting software prior, and now they've decided to use Sage 50. So on page 417, the company has provided us with a balance sheet there, so that's what we're going to use to enter those beginning balances. And we can do that right from this screen. We're in the Maintain Chart of Account screen. We've got a button here that says Account Beginning Balances, so we click on that. And then we have to select the period, and we want to make sure that we select the last month of 2018, so December of 2018 here, and then click OK. And then we're going to use the details in the balance sheet on page 417. Remember that you may have accounts that are in this list that don't end up with balances. Just either type in 0 or just don't click in them. They'll just store a value of 0 for those. But pay very close attention. Triple check what you enter here. If you make mistakes entering the beginning balances, we can correct it, but it requires a journal entry, a correcting journal entry. So it's a little bit of labor to do that. So make sure that you double or triple check all your amounts. You get to the last account on the balance sheet in the book. It says Shannon Larson Capital. Instead of using that name, remember that you use your own name, so it'd be your name, comma capital for that last balance. And then once you've entered all those balances in, make sure that you double check them, but also the totals here on both sides should be matching up, and then the trial balance difference here should be listed as 0. If you see anything but a 0 here, there's definitely a mistake, so go back and look. But I do suggest going through and making sure that each line matches up with the line items from the balance sheet, because there are quite a few that we didn't end up putting a balance in for. And once you've triple check that, then you can click OK, and now those balances are in the system. So now we're going to set up the accounts payable system, and the first thing we're going to do is set up some defaults for our vendors. So I'm going to close out of the maintain chart of accounts window, and then from the navigational menu I'm going to select vendors and purchases, and up top here under vendors I'm going to click on that button and then select set up vendor defaults. So we're going to set up the discount terms for our vendors. We're going to give them 10 days to get a 2% discount. So we'll type those amounts in those fields, and then we're going to give them a credit limit of up to $10,000 by default. Then we're going to set up our vendors to default to an account. It says expense account, but it's actually an asset account, a merchandise inventory account. And the discount account that we're going to map to is going to be purchase discounts. It's account number 59,500. And then once we've got those changes set up, you can click on the OK button. So now we're going to enter some vendors into the system. So to enter a new vendor, click on the vendor button and then click new vendor. And we're going to enter some information for a particular vendor, including their contact information, other details. The vendor's name is James Jarvis Hardware. This is described on pages 420 and 421 of the text. Once you've entered all the information from the text into the General tab, including making sure that they're set up as an independent contractor under the 1099 type field, now you're going to click on the Purchase Info tab and enter their tax ID number, and then verify that the discount terms are matching what we set up earlier, which is the 2% discount if they pay within 10 days with a credit limit of up to $10,000, because those are the vendor defaults. And once you get that tax ID number, that's the last thing you need to update for this vendor. So you're going to click Save and New, and then you're going to enter information for another 2 vendors described on pages 422 and 423. So now that we've entered the vendor information, now we're going to set up some inventory items in Sage. So from the navigational menu, I'm going to select Inventory and Services, and then the first thing I'm going to do is set up some defaults related to the inventory. So I'm going to click on the inventory items and then select Set up Inventory Defaults. So the default settings here are going to apply when we create new inventory items, and what we have to do on this General tab is set up the default item class. I'm going to click on that drop down, and you may remember from an earlier chapter we talked about the different types of items that we can create in our products and services list. We talked about each of these, but a stock item is a physical product that the company buys, keeps on hand, and sells to customers. And that's what we're going to go for default item class here. Next, I'm going to click on the General Ledger Accounts and Costing tab. And for the stock items, we're going to change the costing method from FIFO to an average method. We're also going to set up the default method, or the method for the master stock items, to average as well. Master stock is sort of a template or a parent item used to group together several similar stock items that share mostly the same information, like maybe description, price, and accounts, but they might differ by things like size, color, styles, if you're thinking clothing. But anyhow, we're going to set that costing method to the average method there. And then we're going to do the same thing with the assembly item. We're going to set that to average. Now, I'm not really sure if we'll encounter assembly items since it said we were sales and merchandise company, it didn't sound like we were necessarily manufacturing our product. Assembly is a lot of times used in manufacturing settings, represents a finished product that's made up of multiple component parts, materials, things that you track in inventory. And when you build an assembly, the system would remove the quantities of those components from inventory and add to the finished assembly item list instead. But anyhow, I don't know if that'll be used or not, but we're going to set all these items that have a value that's clickable under the costing column. We're going to set them all to average. And that's the only defaults that we're going to set on this screen. So now we're going to click OK to save these changes. And now we're going to go through and set up a new item of inventory. This is described on pages 426 and 427 of the book. And to do that, we're going to click on inventory items and then new inventory item. And the first thing we're going to do is type in the ID field. It's going to be 001 hardware and click OK. The description of this one is going to be hardware. Since we set the default type as a stock item, that appears automatically, and that's what we're going to leave this as. In the description, we're going to give a little bit more description of what this item is. It's going to be called restoration hardware. For the price level, we're only going to set up one price. It's going to be price level 1. It's going to be a selling price of 150 for these items, and then we can click OK. And then the last unit cost, we're going to enter a value of 50 there. Since we set up the costing method for stock items to be average, that is pre-filling. When it comes to the account mappings, we're going to go with account number 40,000 for the general ledger sales account, which is sales hardware. And then for the default inventory account, we're going to go with merchandise inventory, which is already set at account 12,000. And then finally, for the general ledger cost of sales account, we're going to leave the default there of cost of sales hardware. In the item type field, we're going to type the word hardware there. In the stocking which stands for unit of measure field, we're going to keep track of these items individually. So we're going to type the word each. In the minimum stock field, we're going to enter a value of 10. And for the reorder quantity, we're going to enter a value of 4. And then for the preferred vendor, we can click on the magnifying lens and see those 3 vendors that we just entered, and we're going to select James Jarvis Hardware for the preferred vendor. And make sure you compare your screen against this one or the one in the book, and once you have made sure all the details are matching up, click on the Save button. And now we're going to set up another item of inventory, and to do that we're going to click on the New button. So the screen is cleared, and now we're going to enter all of the details about our next item, which is described on page 429. It's going to have an item ID of 002 wall. When you set up the account mappings for the wall item, you are not going to use the default accounts here, so make sure you pay close attention to that. So for the general ledger sales account, we have a sales for the wall there. For the inventory account, we're going to leave that as the default, but for the cost of goods sold, the cost of sales account, we have one for the wall. It's 50,500. So make sure that your screen matches up with this one for all of the details, and once it does, hit the Save button, and then we're going to create one more new item of inventory next. So hit the New button. And this one is also described on page 429. It's going to be floor. 003 floor is the item ID. The account numbers associated with this one are also not going to be the default for the sales account and the cost of goods sold. So we have a sales account specifically for flooring here. It's 40,400 is the account number. And then similarly for the cost of sales, we have a cost of goods sold account specifically for floor. It's account number 57,000. The inventory account will remain the same, and then once you get all your details to match what I have on screen here, which is also in your book, click Save to save the inventory record. And so that's the last new item of inventory that we're going to enter for right now. And now what we're going to do is we're going to indicate the current balances that the company has of each of these 3 items in its inventory at the point at which the company is switching over to using the Sage software. So we've got this button down below that says beginning balances. I'm going to click on that, and then here I have all three different items. I'm going to start by clicking on the first one, the hardware, and we're going to enter a value here for the quantity, which is going to be 90, and then the unit cost is going to be 50, and the system's going to auto calculate the total cost there by multiplying those out, and we get a total cost of 4,500. And now that we've done that, then we're going to enter the beginning balances for the other two inventory items. So I'm going to double click on wall, and the details for the other two items are on page 430 in the book. And once you've entered your beginning balances for all three different inventory items, you should see a total beginning balance of $19,740 for your inventory items. And once you match that same total there, then you can click the OK button to save these beginning balances, and then click the Save button on your inventory item, and then close out that window. So now that we've set up those inventory items and their beginning balances, now we're going to start recording some transactions related to our vendors and the inventory. So the first transaction that we're going to enter is described on page 434. And remember that most of the time when it comes to the accounts payable process, with inventory at least, you'd have initial step of first recording the ordering of inventory. That's a non-posting event. Once you've ordered this inventory from your vendor, you haven't received it yet and they haven't shipped it yet, so you don't owe them and you can't increase your inventory because you haven't received it. So that's a non-posting event. It doesn't affect the account balances. Once that order has been fulfilled, once you receive it, you're going to compare the quantities received against those purchase orders, and at that point you'd enter a bill into the system to show that you owed money to that vendor. You'd also increase your inventory at that time. And then there's a third step that we could see on the vendors and purchases screen that shows eventually paying off that bill to that vendor. We're bypassing the purchase orders in the text here. They don't indicate that we should go through that workflow, but that's the most common workflow when it comes to inventory purchase. We're going to go right to receive inventory, and then I'm going to select receive inventory from there. And the transaction description says that we bought some curtain rods from James Jarvis Hardware on January 3rd. So for the vendor ID, I'm going to click on the magnifying lens. I'm going to find James Jarvis Hardware. I'm going to indicate the date here as January 3rd. They did provide us with an invoice number. It's 56JJ. Notice that those discount terms that we set up earlier automatically filled, and we purchased a quantity of 6 curtain rods, and those curtain rods are in this category that we'd referred to as 001 hardware per the book. Once I selected that, after I had entered the quantity, you can see that the general ledger account automatically filled to our inventory account, which is account 12,000. We shouldn't have to change that, and then the amount auto-calculated at $300 even. We can take a look at the journal entry here. Since we're receiving inventory and recording a bill that we owe, it's going to show an increase in our inventory, which we see here with this debit. It's an asset. Assets increase on their debit side. We're also seeing an increase to our accounts payable. Accounts payable is a liability account. Liability accounts increase on their credit side. We owe more money, and we have more inventory. That's what that journal entry is essentially saying. I'm going to close out the window by clicking OK. And then I haven't recorded this transaction yet. Make sure all your details match up with this, especially you got $300 here, got the date correct, got the correct vendor, and then the correct item and the quantity. Make sure all the details match, and then click Save. And now we're going to enter 3 additional bills that are on page 437 of our book. So the first transaction on page 437 was dated January 21st. It was from Len Lacey Products, so we selected them. And then what we purchased was a quantity of 8 rolls of vinyl flooring. So the item was 003 floor. The unit price auto filled, and we get a total amount of $432. Once your details match, you can save the transaction. We also have an invoice number of 90, which I should type in there. And now I'm going to save the screen. And now I'm going to move on to my next transaction, which is also on the 21st of January. And this purchase was from Ronnie Becker Fabrics. So we selected them for the vendor ID. We typed in the invoice number. We bought a quantity of 4 curtains. So we selected 002 wall as our item. The unit price auto-filled, and we're seeing a total amount of $120. And now that that's all set, I'm going to save and then record our final transaction on page 437. So our final transaction on that page is with James Jarvis Hardware again. So we selected them for the vendor ID. We typed in the invoice number. We purchased a quantity of 10, and the thing that we bought were curtain rods. So that fell into the 001 hardware item. The unit price auto-filled, and we're seeing a total amount of $500. So once all these details match, click Save, and now you can close out of this screen for now. So the next transaction in the text is a check that we're writing. So I'm going to click on the banking area from the navigational menu, and up top here I'm going to select the Write Checks button and then New Check. I'm going to make sure that the check is coming from our Interstate Bank checking account here from the drop down menu, and then I'm going to click OK. So per the book, we are writing check number 3030, so we'll type that number in on January 24th. So we'll select the date, and we're writing the check to another vendor that isn't in the system. Their name is Lou Klein. So since they're not in the system, I'm not going to enter them right now with the vendor ID. I'm just going to put their name in the pay to the order field. We are paying them a total of $160, so we'll type that in for the amount of the check, and then the account that this should be charged to is going to be, per the book, account number 70,000, some kind of maintenance expense. And we should make sure that we look at the cash account that this is drawing from. It's going to come out of our Interstate Bank checking account, and it's going to be charged to that maintenance expense. So once all those details match up, you can click Save to record the transaction. On page 442, the text describes several more checks that we're going to write. So we're just going to follow along with the details. Now notice that the check number for the next check just auto-filled since I haven't changed the screen. So it's showing check 3031. And I'm just going to enter the details from the book about this check. So I entered the amount of the check at $45, got the date in there. We wrote to the name U.S. Post Office because it was the post office. In the chart of accounts, I selected postage expense, an expense account, 73,500 is the number. Once all these details match up, we'll click Save to post the transaction. All of the transactions on page 442 have the same date, so we don't need to change that. And the check number autofilled to 3032, so we're going to enter the details from the book. So we've entered those details, the amount, the pay to the order of was Green's Office Supplies, and the text told us which account to charge to. They went to an expense account for supplies, 75,500 is the expense account. So I'm just going to save the transaction and move on to the next one. So on this next check number 3033, entered the amount. The name was ILM Phone Company. Because it was a phone company, I looked at our chart of accounts and the expenses, and I found a telephone expense at account number 76,000. I selected that, and now that I got all those details in there, I can save to move on to my next transaction. And my next two transactions are both similar in that they're owner withdrawals of $500 each. So the first one is from Brian Stewart, my partner in business. So I'm going to record this now. So the check is being written to Brian Stewart. And because Brian is removing funds from the business for personal use, the account that needs to get charged here is going to be a drawing account for Brian Stewart. So it's account number 39,007. And once I have those details in there, I can save to record our final transaction, which is another owner withdrawal of $500. But this one is going to be to the other owner, which is you. So put your name as to the pay to the order of. And when you go to select the account, select the drawing account with your name on it. So for me, Brian Daly Drawing, your account number should be 39,009. And it looks like I misspelled my own name. I wrote Brain Daly. That's sort of funny. I'm going to save that and I'll fix that in a moment. So our next transaction is going to show that we've returned some of the purchased items to a vendor, and the transaction is described on page 443. And to record the transaction, we're going to click on the vendors and purchases tab here, and then we're going to click on the credits and returns button and then select new vendor credit memo. So per the book, it says we return 1 roll of vinyl flooring to Len Lacey Products. So we're going to select Len Lacey from the drop down here. Once we did that, we can see that the apply to invoice tab became active, and then there's a drop down here to select an invoice. We are going to select this invoice of invoice number 90. And we can see on the invoice we had been billed and had received a quantity of 8, and we are returning 1 roll. So we're going to type in 1 in the return column there, and once we do that, the amount field auto calculates. You need to set up the date correctly. This is on January 25th, and we do have a reference number for the credit number. It's going to be VCM 90. And then before I save the transaction, I'm going to click on the transaction journal, and we can see here that our inventory account is being credited. It's decreasing. Reason being that we returned some inventory, we have less of it. And then also because we attach this return to invoice, well, that indicates that that we're going to reduce our accounts payable. We owe this vendor less because we returned some of the stuff that we haven't paid for any of it yet, but we returned some of it, so we're going to owe them a little less. Now we can close out of the journal entry screen and save and post the transaction. So now I'll close out of the vendor credit memo screen. Now we're going to pay off the bill that we have to that vendor that we just had returned product to. So I'm going to click from the vendors and purchases area, I'm going to click on pay bills and then select pay bill. And for the vendor ID, I'm going to find Len Lacey Products. Once I did that, the apply to invoices tab became active. First though, I'm going to enter the date, so we're making the payment on January 25th. And now that I've done that, I'm going to type in the check number. It's check number 3036. Now that I've entered all those details with the check number, the vendor, the date, now I'm going to check the box next to this invoice to show that we're paying it. Now the system is calculating the discount on the total original amount that we owed them, not considering the fact that we had returned one of those items to them. However, the amount due that's shown on the invoice does reflect that return, but the discount amount doesn't. So we need to manually calculate the discount. And if we recall, the terms for all the vendors was 2%. So if I come down here and pull up my calculator, I can take the amount still owed after the return, which is $378, and multiply that by 2%, and I can see the correct amount of the discount is $7.56. And the way that this one was calculated was including the returned item. It does it before that. So I'm just going to manually type in the correct amount of the discount, and when I do that, I should get a net amount of $370.44. And once all your details match up with that, we should be ready to save. One last thing to mention though is because there was a discount, we are using this account 59,500 for purchase discount, so make sure that is selected. It should be by default anyway. And now we can click save. And now I'm going to record 2 transactions that are on page 448 of the text. So I'm going to close out of the payments window for now. And the first transaction is a return of some product to James Jarvis Hardware. So on the vendors and purchases area of the navigation menu, we're going to click on credits and returns and then new vendor credit memo. We're going to select that vendor, James Jarvis Hardware, and once we selected them, the Apply to Invoice tab became active. We're going to select that, and then we are returning from invoice number 78JJ, so we select, and then we're going to put in the date here. So the date of this return is on January 28th, and then the quantity that quantity that we're returning is 2, and once we typed in that value for the quantity, the amount autofills and it should be a total of $100. And now we're also going to need to enter the reference number for this return, which is VCM78JJ per the book, and now all those details are there and we can save the transaction. And we're not going to be entering any more returns for right now, so I'm going to close out the window. Instead, we're going to pay off this vendor that we just had the return with. So I'm going to click Pay Bills. From the Vendor ID window, I'm going to select James Jarvis Hardware. When I did that, the Apply to Invoices tab became active. Before I get down there, though, I'm going to correct the date. So the date is January 28th that we're making this payment. And then the reference number for this is going to be the check number that we're writing. It's check 3037, and then we are paying off the invoice 78JJ, so we're going to check that box. The amount due reflects that return that we just made, but the discount does not, so we have to manually calculate that discount again. So here we have an amount after the return of 400 still owed, but we are getting a percent discount, so we're going to multiply that by 2%. That gives us an $8 discount. So we're going to type that in, and that's going to change the amount of the pay. It's going to be $392, and then we're going to save that transaction. And now we are going to write another check to our other vendor for what we owe them. So that one is described on page 449, and we're paying Ronnie Becker Fabrics. So I'm going to select them from the vendor ID list, and then once I did that, the Apply to Invoice tab became active. Put in the correct date. It is January 28th, and the check number autofilled to 3038. That's good, and we are paying off invoice 210, and there was no return related to that transaction, so the discount is calculated correctly, so we can just save and post this transaction. So from this chapter, I'm going to need a bunch of different files for each company. For the Your Name service merchandise, I'm going to want the chart of accounts. So click on your reports and forms, general ledger category, pull up your chart of accounts report. When you do that, compare these against those in the book. What I'm finding most common mistakes are not specifying the correct account type. So if you look at the account numbers here, and you should see a pattern, a whole bunch of expenses in a row, especially if you see like the default account of cash popping up in here. Those are the ones to sort of scan and quickly check on. And then the other common mistakes with this particular company is with your equity accounts, the drawing account should be set to be an account that gets closed, and then the capital account is an equity account that doesn't get closed. But check out all the details, but those are the most common mistakes. Make your PDF and submit it. Of course, name it appropriately, because you're going to be sending basically duplicate reports for both companies in chapter 12. So this one, might something designer chart of accounts, chapter 12, for the name of the PDF. Or just use the names that I provided in Canvas. That's probably the best practice. So if you're in the report chooser, you can click on the accounts payable category, and here we're going to pull up the purchase journal. So the purchase journal is going to show all the purchases of inventory on credit that occurred during the period, and when you look at your report, you should see the same total and all the same details. But first check the total, that's the fast way. And then make a PDF of this one, name it accordingly, because you'll have to submit it as well. The cash disbursements journal can also be found under the accounts payable category. This journal looks at every transaction that involved a decrease to your checking account, a decrease to your cash accounts. And we have all these journal entries. Make sure that when you compare this, it matches up with yours, and you can check these two totals to verify that right from the get-go. Once that matches up, make a PDF and submit that with an appropriately named file. Our next report is going to be a vendor ledgers report. So to pull that up, you once again go to the accounts payable category. Here's your vendor ledgers. With your vendor ledgers, what we're looking at there is an account payable subsidiary ledger. It's showing the details of our accounts payable and all the vendors that we owe. So we see that we have 3 vendors. We see all the activity inside of each vendor's account, and we can see their ending balance. James Jarvis Hardware, at the end of the period, we still owed them a balance of $300, but the other 2 vendors have been paid off. They have 0 balances, so the total account payable is also $300. But make sure all 3 of these totals match up with your screen. And then finally, the last report I need you to run is going to be your general ledger report. So in your report chooser, select your general ledger category, and then your general ledger trial balance is what I need. And from here, I can quickly tell if your balances are incorrect by looking at these totals. So check that first, but then go through and make sure all of these details match up with yours as well. Once you've done that, it's time to create a backup. That was a ton of work, so we don't want to lose any of this in case we have any catastrophic problems. So we're going to File and then Backup, and then make sure that you save this backup in an appropriate spot. Desktop downloads or documents if you're using your own machine. If you're using the virtual environment, make sure to select that J drive there, and then give it an appropriate name. Maybe this could be, your name, service merchandise, end of chapter 12. Once you've done that, now it's time to switch over to the exercises. In the exercises, you're going to be creating another new company. So you're going to want to get out of the service merchandise. So you're going to want to go File and then Close Company. And then you're going to create another new company, and you're going to follow the steps in the book. It's going to be very similar and a little bit shorter than what we did here in this video today.